let's get into some of this NQ news, see what the hell's going on. So we got... okay, Biden's doing something. High prices for gas and other essentials are helping to keep the president... Yeah. It's his approval rating's low, not because he disappears in the bushes or can't talk. It's mainly because gas prices. I mean, that's a big reason why, but still, I would put that in there too. Anyway, let's see. They made an effort to estimate. Oh, wow. They made an effort to estimate. Wow. Wow. That's amazing. I can't believe they took that much effort. How much releases from oil reserves have helped rein in gas? What? Is anybody under $4 a gallon of gas anywhere in America right now in this chat? Cause it's like still like $4.30 something like that here in Wisconsin. Okay. As Americans frustrated with raging inflation. Yeah, it is definitely raging. You know, there's somebody who said that, you know, in the last couple of years we were going to see crazy inflation, and I don't know who it was, but, you know, if somebody could find that person, I'd sure like to follow his channel. The White House said in a statement that the Treasury Department reckons that the we are talking about the United States Treasury Department. They should not be reckoning anything. This is not one of my hillbilly cousins from Tennessee that is sitting outside on the porch smoking a cigarette going, I reckon that releases from strategic petroleum reserves by President Joe Biden and international partners end up making the price at the pump for Americans up to about 40 cents per gallon lower than it otherwise would have been. They're reckoning. You reckon. The National Treasury, the Treasury Department reckons. Okay. Wow. Biden's orders largest ever release from oil's reserves as he reacts to yeah. And then he blames Putin. It's not causing inflation. Although he said up here it was causing inflation. But according to Biden, it's Putin. As Biden fights inflation, economists warn his weapons for the battle look extremely limited. Remember, rock and a hard place. Feds are in a rock and a hard place. Biden's not doing anything. Biden's not fighting inflation. He's sitting there watching The Price is Right every morning, getting drugged up for his press conferences. Okay, the White House also continued to highlight that gas prices have been pulling back from their highs. They've fallen for 6 weeks straight, and they're nearly 70 cents below where they were last month. Wow. They're 70 cents less than $5.50 and $6 and $7. That's a real great job, guys. I reckon y'all are doing a wonderful job. All right, that's enough of that nonsense. Okay. What'd you say? It's 369 there in where you're North Carolina, right? Oh, they got a gas promo going on, yeah, but see, you still got to spend. They want you to shop. So to earn those gas points, you're shopping at the grocery store that I was just talking about, where you're paying the high inflation on all the prices, unless you're going with the grocery store's own brand, which cuts out all the other business creating monopolies. So we're in such a mess right now. Okay, but let's see what we got here. They're talking about GE. I don't care about GE. Walmart profit warning. Okay, so I was expecting them to have some good earnings, but they're saying they're not. Oh, no. Okay. Two stocks hurt by Walmart cutting profit guidance ahead of a wave of corporate earnings. This is the big deal right here, though. While the International Monetary Fund warned the potential for a sharp global slowdown, it's not potential. We're already in a global slowdown. You can see that across all of the stock markets in every single country. Okay, so nothing there. It's important. So they cut its profit outlook, saying inflation on food has caused it to conduct more markdowns in apparel. It's like, what was I saying? They were marking down things. So they're playing like it's hurting them, even though it's actually helping them monopolize, but whatever. Okay, this is another reminder how shifting dynamics in consumer preferences and supply chain issues are impacting retail. Okay, so which one is it? What's the inflation coming from? Is it coming from Putin? Is the high prices coming from Putin? Is it coming from is it coming from what Walmart's saying, that, you know, like everybody's saying something different right now. The truth of the matter is, inflation simply is just printing more money and devaluing the currency. That's all it is. So you see the finger pointing all across everywhere, and it's all finger pointing because the real culprit is the Federal Reserve. Okay, let's see here. Since expectations were set so low going into earnings season, the underlying theme so far has been the situation as so they had expectations set for Walmart going low in the earnings season, but let me read further. So far, that the situation has not been quite as dire as many feared. Yeah, right here, Federal Reserve starts its 2-day interest rate meeting Tuesday, which is today, which is expected to conclude with a 75 basis point rate increase. As the central bank continues to tighten aggressively. Yeah, remember they tightened with all those point raises so far, and inflation's still going up. So, okay, so they're looking like they're going to come out with 75. Now, this meeting could happen at any. I mean, they can come out and say this at any single time, right? That's why I'm not trading, because the meeting is a 2-day meeting. They could cut it early, come out today, right in the middle of the market being open, and say, hey, we're doing a 1%, 1.2% interest rate hike, and then the market dumps. 75, if they just do a 0.75 interest rate hike, because basis points, I mean, you know, people like to use the basis point way, but it's just a point. You know, we're talking about percentage-wise, so screw the basis points. This 0.75, it's 3/4 a point. No reason to get confused with basis points. But that's probably not going to affect the market quite as hard. I mean, we're seeing it baking in already. People are dumping ahead of this Fed meeting. So, I see some newer PR that just came out a few minutes ago. We're almost to that, so let me keep on reading here. Right here. This is what it is. Okay, let me look at the rest of this first. U.S. economic data Tuesday. The S&P Core Logic Case-Shiller 20. What is this? I don't care. This is crazy. S&P Core Logic Case-Shiller 20 city index. Like what? First off, there's way more than 20 cities. So, I mean, maybe they've got the top 20 biggest cities, but that ignores all the other economic data of the whole rest of the country. So, I don't know why you would I've never even heard of this nonsense index. So, it decelerated to a 20.5% year-over-year gain in May, down 21% from the previous month. The Federal Housing Agency showed a 1.4% monthly gain, and over last year, the FHA index was up 18%. Sounds very pre-2008. The Conference Board said its index of consumer confidence fell to 94.7 in July. Yeah, because consumers are paying more. They're pissed off. U.S. new home sales plunged 8. See, I've been saying the housing market's already crumbling. U.S. home sales plunged 8.1% to a seasonally adjusted rate, so they are adjusting it, to 590,000 in June from a revised 642. So almost 60,000 less new home sales in June from the month earlier. So that shows a decrease in buyers. If people are not buying houses, then there's going to be supply. And that means the prices are going to come down. Inflation, gas prices, everything else is keeping people from buying houses. So therefore, we're seeing a decrease in home buyers, which means that there's going to be cheaper homes, more supply popping up until demand comes back in. Demand besides like Bill Gates buying farmland and a couple of institutions buying up apartment complexes and stuff like that. You don't have any majority of the country buying houses right now. I mean, we have 360 million people, and 590,000 houses were bought in June. That's a big decrease. So, not looking too good there. We're talking about GE again. That's that Biden thing. Blah blah blah. Consumer confidence declines for third straight month in June. Of course it does. Big picture, consumer confidence is heading lower and amid rising inflation and continued talk of elevated risk of recession. Right? Like I've been saying, we're already in a recession. There's no risk. We're in it. We have already hit the definition of recession. 2 quarters in a row, slowed in GDP, and higher inflation. And so we were in a recession at the beginning of Q2. They can keep saying we're not, but by definition, we are and already been in a recession. Economists note wealthy consumers are still spending. Yeah, well, of course they are. Let's see, this is the conference board. They said, looking ahead, inflation and additional rate hikes are likely to continue posing strong headwinds. Exactly. Additional rate hikes and inflation together, we're in crazy times, crazy volatility. Outside economists say consumers increased pessimism and consistent with our view that consumer spending and broader economy are downshifting to a much slower growth path amid high inflation, rapidly rising interest rates, and financial market volatility. While we see strong economic fundamentals, well, okay, I agreed with them up to that period. As soon as they said that, as soon as the period ended and then they said we're seeing strong economic fundamentals, and then, yes, we're seeing it from, okay, all right, never mind. All right, so there's inflation everywhere. And who said this right here? Somebody's talking some sense. We've been spoiled over the last couple of years by how every single earnings report was it meeting or exceeding expectations. The CIO of Mission Square Retirement. Certainly, as we've got into 2022, that has not been the case. So, as I said, the last couple of years, even since 2018, the Feds have been buying. They've been buying assets. 2022, they stopped. They stopped the QE. They're dumping assets. That is what he has noticed. He's not saying it. I don't know why, but that is the case. And look at the market still dropping. As I'm talking about the news and inflation and everything, we are still dumping. Woo, boy, I can't wait to hear what these Feds say. It's going to be an interesting one. Each report stands to offer clues about how well different corners of the industry are withstanding inflation. So again, the companies that are benefiting off of inflation mainly are the materials companies, right? The people pulling things out of the ground that makes all the other products. Because inflation is higher, the gas prices are higher to run all that machinery. They can charge higher prices for their materials and write off the machinery costs, causing them bigger profit margins. You seeing this in the gold and silver mining, as well as coal, natural gas, all of those different commodities. They are having better earnings because they're able to charge a lot higher prices for the materials they're pulling out of the ground. So those sectors, good sectors,